Let's shift gears over to investors. And of course, we'll open it up for questions in a little while, but I wanted to get through the one thing that I know that scares people: the investor cash flow loan, no tax returns, no income verification, no employment documentation. And I think that when you look at some of that stuff, you think, are we going back to troubled times? The too big to fail kind of bank scares that really tortured and scared many people. So will you talk about these?
So, for example, we have in the marketplace, and like we have one, it's a portfolio loan for investors where the down payment's 25% and a certain credit score is required, no tax returns, no banks. I mean, we do verify bank statements with assets, but no tax returns, no employment, and we verify the assets. So investors, you're looking to purchase a home, and there's tremendous and growing opportunity out there. There are loan programs where you can go with you can go the Fannie Mae, the Freddie Mac route, as little as 15% down or 20% down. You're going to provide W-2s, pay stubs, bank statements, and tax returns. So those options exist through Fannie Mae and Freddie Mac. The other options are portfolio programs or even non-QM, non-qualified mortgages, where they play outside the sandbox and no W-2s, no tax returns, no pay stubs. You just need to show proof of assets to purchase your home. And in our case, we require, since it's an investment property, we require that you show you have ownership of a primary residence. So the options are out there. 25% down, we feel as though there's enough skin in the game and a commitment that's given, not zero down. I remember zero down. I remember 5% down back in the day, but that's not where we are anymore.
Not for investors.
Not for investors. But years ago, investors could do that.
Yeah.
No, not anymore for investors. And it's a growing market, and investors are purchasing homes.
Absolutely. So one thing you talked about, the qualified mortgage, and you talked about, being inside the sandbox and outside the sandbox. For those of us who are not in the business, I want you to explain that as if you're talking to somebody who's a brand new first-time home buyer who doesn't know any of our jargon.
Sure. So a qualified mortgage, usually Fannie Mae, Freddie Mac, requires W-2s, pay stubs, bank statements, tax returns, because those loans by most lenders are sold to Freddie and Fannie in their conservatories, placed in their pools. The non-QM, non-qualified mortgages are portfolio loans that lenders hold themselves. And then the rules are a little bit different. Usually the down payment is a little bit higher to substitute for lack of documentation, or minimal documentation would be a better way to say that. In this case, for example, here's a big advantage. If you, on an investor who lives in the United States, we run a credit report. Investors who do not live in the United States and live in Canada, live in China, live in another country, we do not require a credit report.
What do you require instead?
Proof of ownership of a primary residence with a good payment history.
Yeah.
And most times those people who live outside the US, they're called foreign nationals.
Right.
They don't have US credit anyway.
Yeah.
So we just have to show proof that they have ownership of a home and an excellent payment history.